Welcome back to the channel, everyone. Manny B Investing in BI, and we have a bit of a question from a Twitter friend. Follows us. Says, "Good morning, Manny. I have a question regarding PBX. What's up? Is PBX different from the lending and borrowing companies that went bankrupt over the last several months? 3AC and the rest." And my response was 3AC was a centralized hedge fund. Paribus is an EVM borrowing and lending protocol that is on chain. George responds, so centralized is the key word. Well, I would say it is one of the key words, but it is not the only negative thing against 3AC. Let's take a look. 3 Arrows Capital, crappy website. But what are they? 3 Arrows Capital is a hedge fund established in 2012 and focused on providing superior risk adjustment returns. Founded by these two guys right here. Fast forward, I want to say that they're facing some legal issues. First off, this company started in 2012. It's not on chain. It's not a protocol. It is not decentralized in any way. This is essentially two guys are the centralized actors in this company, and they did things. Let's take a look and see what it is they did. So according to CNBC, remember, we're going to take this with a grain of salt. We don't really know these people. We don't know if she's a friend or foe of crypto, but we're going to pull the information out that is verifiable. So in the story, let's take a look at the key points. The bankruptcy filing from 3 Arrows Capital triggered a downward spiral that wrapped in many crypto investors. The hedge fund failed to meet margin calls from its lenders. So that's a problem right there. Paribus takes investment, so that money isn't to be repaid back necessarily. It's paid back with stake. So they get provided with an inflow of cash, whether that be crypto assets or cash itself, a cash investment that is used to build the protocol. This company was taking on loans to take bets. The protocol builders for Paribus are not actors or players in the game. They're building an actor and player in the game in a product called a protocol. This is the Paribus protocol. It allows you to borrow and lend assets, new digital asset class, so coins and tokens. And the secret sauce of Paribus is the NFT borrowing and lending. So they would pick project, like I said in previous videos. I believe these projects are going to be heavily OpenSea, Ethereum projects, the blue chips, your big guys, your bit, what do they call those? The apes, the bored apes, yacht clubs, the pudgy penguins of the world. So the big boys, because those are the NFTs that are fetching a lot of volume, a lot of mainstream access. A lot of celebrities are buying and selling these. So, of course, they're going to go with the item or product that has the best chance at mainstream success, which are mostly, unfortunately, they're not going to be the Cardano NFTs at this point. They're mostly going to be the Ethereum project. So that's what they are open to or starting with. So that's the difference right there. 3AC was supposed to be the adult in the room. So it looks like, again, this is a hedge fund. So this is just a bunch of gambling. It is not a crypto project. It is a hedge fund. So as recently as March, 3 Arrows Capital managed about $10 billion in assets, making it one of the most prominent crypto hedge funds in the world. The only problem with that is markets go up, markets go down. So as the market's pumping and the bear market is here and everyone's happy, or not the bear market, but the bull market, the 2020, 2021, these massive pumps in digital assets that sent everything and everyone to the moon, of course, firms like this are going to see massive success. They were on the macro as far as this bull run went, but didn't understand that all bull runs come to an end, followed by a bear market. And that is what happened. Now the firm, also known as 3AC, is headed to bankruptcy court after the plunge in the cryptocurrency prices and a particularly risky trading strategy combined to wipe out its assets and leave it unable to repay its lenders. So what happened was a bunch of leveraged parties loaned this hedge fund money so they can take that money and gamble with it. They did that initially and found great success, which is why there was such confidence in this hedge fund. So people, without really doing their due diligence, clearly decided to loan this hedge fund money in the hundreds of millions of dollars. Crypto exchange blockchain.com reportedly faces a $270 million hit on loans to 3AC. So blockchain.com loaned this company $270 million, maybe even more, to this hedge fund because they were doing really well in the bull market. All of the cryptocurrency prices took a dump, everything, even your bags. They fell. Theirs fell too, but they had way more assets than we did. They had hundreds of millions of dollars wrapped up in these assets, such as Bitcoin and Ethereum, XRP and others. They probably held Matic, things like that. All of it went, all of it crashed, all of it hit the floor, all-time lows all around. And when that happens, it caused a chain reaction. People that had loans out in this crypto market, when it was high, they want that money returned. And they can't. There's no money to be had. They couldn't pay back their loans. They had big loans. Chapter 11, after 3AC couldn't pay back roughly $670 million it had borrowed from the company. They borrowed $670 million from Voyager Digital. And when their assets crapped the bed, they had no money or assets that were worth anything to repay that debt. So what happened were these companies started to understand that. So they started to pull their loans. Hey, I want repayment of this loan, knowing that they didn't have the money. So what happens is they have to go into bankruptcy. And what they do is they, typically they liquidate all their stuff. They pay out all the big people first. And then if there's anything left over, the small fries get their crumbs. But in this case, I highly doubt it. I feel like, Voyager and blockchain.com are going to get a fraction of what they lent out. If it's super bad and these are American-based companies, they may see some relief from governments, depending on where their jurisdiction is. But they all got wrecked. They all made a bad decision to loan big dollars out to invest in the bull market. The bull market turned into the bear market, and they got wrecked, just like a lot of other people. They spent more than they could afford to lose, and those are principles that I guide myself with, and I hope you do the same, or at least consider it, which is to never invest more than you can afford to lose. You have all these people, with the FTX thing that were on the spaces with Elon and all of them, and they were saying things like, I got wiped out by FTX. I had all of my money in it. I'm going to jump off of a building. Okay, so what you should do is you should rewind and you should look at these situations. Are you putting enough money into these accounts that if you were to lose all of it, you're going to jump off of a building? If that is the case, you need to take a step back. Maybe investing, or what you're doing, we would consider gambling, is not for you. Maybe you should take a step back. But what you can do to avoid things like this is to understand what's happening before the bad stuff happens. Would I invest in 3AC? No, I would not. Why would I want to be involved in hedge funds? Hedge funds are not necessarily good for people like, small people like you and me. We don't have enough money to deal with this stuff. And we definitely don't want to leverage ourselves to the point where this is happening to us. Crypto exchange, blockchain.com, never used it. Centralized. Voyager, never used it. Have a bunch of friends, acquaintances that use this stuff because it allows you to get easy access to crypto. But I have gone back through those conversations with those people, and I did my part. I told them not to use centralized exchange, get used to digital DEXs, decentralized exchanges. Get used to holding your own assets in a wallet, such as MetaMask or Giro Wallet if you're on Cardano. Hold your own assets, make your own moves using decentralized applications. Don't store your assets in centralized exchanges such as Coinbase or KuCoin. Yes, I use KuCoin. Yes, I've used Coinbase, but I use them for transactions and I immediately get my assets off of them. That's what I recommend you do. Let's take a look at Paribus. What is Paribus? Paribus is not a hedge fund. Paribus is a project. It is a protocol, a borrowing and lending protocol that is on chain, verifiably on chain once it launches. The PBX token is a governance token, and I've spoken about governance multiple times through different posts. My opinion on governance, I'm not the biggest fan. For PBX to make it to the next level, for me, we need real use case. We need the token to be more than just a governance token. The token should be more than that. They do have plans to do, protocol fees, going to the token, people that stake, et cetera, et cetera. But the PBX token needs to evolve and be more than just a governance token, because in my opinion, governance is one of those things that just is not solidified yet. Pure democracies don't work. Having governance on chain in a pure democracy type of way is going to cause problems, in my opinion. But I do like PBX. I do hold PBX. The pricing right now is just really good, too good to pass up almost. So I'm accumulating small amounts, not financial advice. I'm not telling you to do that. But if you are in PBX, you know the deal. So that is the difference between Paribus and a hedge fund such as 3AC. They're not the same. 3AC is a centralized organization, company that operates in a centralized fashion with two people controlling the interests of the firm, and clearly they made mistakes because of what happened. PBX or Paribus is a protocol. It is a project of people developing an application that will be on chain that you can use to borrow and lend. They're not doing the borrowing and lending. This is a completely separate, decentralized action that is happening with users of the protocol. So Paribus, the people behind Paribus, are not involved in what you do on the application. So it's a completely different thing. But this was a really good question. So hopefully this answers the question for you, George. And thank you for following. Thank you for checking out my content. And we'll see you on the next one. Peace.